Now, back to the directions and let's move on to number three. So the number three reads, using the income statement and balance sheets, build the statement of cash flows in the given format. Use outliner to group the data. So why don't we move to the statement of cash flow tab and take a look at the format itself. So it looks like all the items have been prepared for you. So all you need to do is find the numbers for each item. So for some of the parts, it's going to be really straightforward, such as net income. You will just directly copy the number and just put it on the cell right next to it. But some of the parts you will have to actually calculate. And when you are doing the calculation, you will have to keep in mind whether that particular item has a proportional relationship with the cash flow or an inverse relationship with the cash flow. So we discussed that part in the review section, and I really want you to remember that as you go along. All right. So let's start from the very top item, which is net income. Again, when you are dealing with the cash flow statement, it's always on the net income, which is the starting point. Okay, so net income amount, to find it out, you have to go to the income statement, right? And the net income is located on at the very bottom. So it's going to be this item amount. So just click yes. And oops, it happens because it's running out of space. So why don't you just increase the width? It's probably better. Okay, great. And the next part will be depreciation expense. And depreciation expense is easily found on the income statement as well, right? There is a separate item. And so net income was just, the net income amount, but from now on, you will have to figure out whether it has an inverse relationship or proportional relationship with the cash flow. So depreciation expense, if you think about it, it's an expense calculated based on accrual basis, but not based on cash flow basis. So what it means is there was no cash outflow involved when we're calculating depreciation expense. So if we wanted to calculate cash flows, what we would have to do with depreciation expenses, we would have to nullify that effect or add it back. That way we could correctly calculate the cash outflow or inflow. So why don't we go to the income statement and find out the depreciation amount and say, okay, and depreciation expense has just been added back to the net income amount. And from now on, from change in marketable securities to change in accrued expenses, they are all balance sheet items, and you have to pay keen attention to this part as we move along and try to figure out whether they have a proportional or inverse relationship with the cash flow. So let's first start with marketable securities. So marketable securities, if you think about it, if we increase that amount, that would have a negative impact on or decreasing impact on cash outflows because we're actually purchasing marketable securities, right? So inverse relationships, putting a minus sign in front and start a parenthesis, open a parenthesis and go to balance sheet and you see marketable securities. So change in marketable securities would mean ending value minus beginning value, close the parenthesis, say okay. And this will be the amount, the change in marketable securities amount that affected the cash flows. So how do we interpret this value? So what it means is because marketable securities increased by this amount, cash flow actually had to decrease by the same amount as well. Okay, so that's how we would interpret this amount. And let's move on to the next item, accounts receivable. Again, the same thing, increase in accounts receivable. If you think about it, it means your customers have not paid you yet. So that would have an inverse relationship with your cash flows. So start with a negative sign and then move back to balance sheet. Find the ending value of account receivable minus beginning value, and you will have 1010. So again, but here it's the value is a little different because this is not a negative value but a positive value. What it means is if you go back, you find that accounts receivable actually decreased. Because it decreased, it will have an inverse relationship, which is increase in the cash flow. Right? So let's just continue without further explanation. Change in inventory, again, negative sign. Go to inventory item minus ending values minus beginning value. Close the parenthesis. Yeah. So that will have the same positive impact on the cash flows. And the next two items, change in accounts payable and change in accrued expenses, if you think about it, they are liabilities item. So more liabilities would mean that you haven't actually paid that expenses yet, or maybe you increase the amount of debt from your creditors, right? So it would have a positive impact on cash flows. So more liabilities, more cash flows. So proportional relationships. So no negative sign outside. And go back to balance sheet and ending value minus beginning value. Yeah, and this will be the change in accounts payable. What about change in accrued expenses? This will be going back, again, positive or proportional relationship. So just no sign outside, just ending value minus beginning value, say okay. And this will be the amount of impact on cash flow. So you have calculated all items under the category of cash flow from operations. You sum them all. And there you go. This will be the total cash flows from operations. So why don't we go to the cash flows from investing area. So change in gross fixed assets. Another name for this change in gross fixed assets, this will be CapEx or capital expenses, but your textbook just calls it change in gross fixed assets, so I'm going to leave it this way. And this item, if you think about it again, this means purchase, right? So purchase means cash outflow, an inverse relationship. Should be negative. Go back. Oh, forgot about the parentheses. But don't forget your parentheses when you actually have a negative sign outside, okay? Again, so go to gross fixed assets, ending value minus beginning value. Yeah, and this will be the impact from gross fixed assets. And there was actually one item under the category of cash flows from investing. So you can just copy it, but I'm going to just in case to make it comparable to other items. So I will just say sum in just one item and close the parentheses, and it will exactly give you the same value, right? Okay, and let's move on. The third category would be cash flows from financing, right? So change in long-term debt, change in common stock, and add additional paid-in capital. These are all long-term debt and also equity items. And they are all on the right-hand side. An increase in debt or equity, that means more cash flows from your shareholders and creditors, right? So proportional relationship. So go to the balance sheet, find long-term debt, ending value minus beginning value, say okay. Yeah, and yeah, you have the value. And again, let's find common stock value, ending minus beginning, 0. Change in additional paid-in capital. This will be this minus this, right? Okay, and this will be 0 value. Rarely will you have a value other than zero for change in common stock and change in additional paid-in capital because besides the case when you are actually doing repurchasing, stock repurchasing, or issuing more stocks like SEO or maybe like sales of treasury stocks, that kind of stuff, it's usually just no change in common stock or additional paid-in capital. So most of the cases you will just find zero under these values. All right. So total cash flows from financing, again, you're summing them all. And there you go. You have the total cash flows from financing. So in the end, the last step will be to get the net amount, which is total cash flows from operations and from investing and also from financing, their sum. And there you go. The net change in cash balance for years 2016 would be 4,414.